The AI war has officially begun, and it's not happening on the battlefield. It's happening inside server racks, inside data centers, inside the pipelines of capital markets. Everyone is talking about AI as if it's the next gold rush. But behind the hype, behind the trillion-dollar promises, behind Jensen Huang's leather jacket and Wall Street's champagne, something is cracking. Something big. Something dangerous. Because the truth is, the United States cannot afford the AI war it started. And if the bubble pops, it won't just take Silicon Valley down, it could take the entire American economy with it. So buckle up, because today, we go underground into the financial machinery powering the AI boom, and why the gears are starting to grind. Let's start with the obvious. AI is insanely expensive. Not Silicon Valley expensive. Not government expensive. I mean empire-ending expensive. To build the so-called AI future, the US needs endless fields of data centers, massive warehouses filled with liquid-cooled racks of Nvidia GPUs. But here's the catch. America is the single worst place on Earth to do low-cost manufacturing. Because of tariffs, the price of everything, from copper wiring to steel frames to cement, has shot up by 20 to 30%. That means every data center today costs dramatically more than yesterday. And the next one? Even more. This is not a sustainable arms race. This is a financial black hole, dressed up as innovation. Even Wall Street is starting to sweat. And trust me, when Wall Street gets nervous, it means something is deeply wrong. According to JP Morgan, the biggest risk in the AI boom isn't technology. It's credit, the money, the lifeblood. Big tech companies, Amazon, Google, Meta, Microsoft, are issuing more bonds than ever before. Nearly $240 billion in 2025 alone. That's double last year. It's even higher than the huge post-pandemic borrowing spree. And here's where it gets terrifying. By 2028, these tech giants are expected to borrow over $1.5 trillion just for AI. This creates a two-body problem the US economy has never faced. 1. Big tech vacuuming all global capital. They suck up money like a black hole. 1. Real industries starving to death. Manufacturing is contracting. Small businesses can barely borrow. Main Street is drying up. Both systems depend on each other. If workers lose their jobs, big tech loses revenue. If big tech defaults, credit markets vaporize. It's a circular firing squad. And it's already happening. MIT recently studied over 1,000 corporate AI projects. And the results? Catastrophic. Only 5% delivered a meaningful return. The other 95% were failures or wasted money. That means corporations are pouring billions into projects that don't pay off. The hype is real. The profits? Mostly imaginary. But Jensen Huang, the king of GPUs, says everything's fine. He says this isn't a bubble. He says the AI future will be continuous and inevitable. Of course he says that. He's selling the shovels in a gold rush. But the buyers, the corporations, the governments, the investors are not getting gold. They're getting debt. If you want to know the truth, don't listen to politicians. Don't listen to tech CEOs. Listen to traders. They bet on reality, and traders are betting big against the AI giants. Take Oracle. The company is taking on tens of billions to build AI data centers. Traders' response? They piled $4.2 billion into Oracle's credit default swaps, which is a polite way of saying, we think you're going to default, and we're preparing to profit. If AI revenues were guaranteed, nobody would be making that bet. But they are. Aggressively. Even worse, experts predict corporate borrowing costs will jump from 75 basis points to over 100. That means companies will pay way more to borrow. And who is one of the biggest competitors for capital? The US government itself. Washington is drowning in debt. Tech companies are drowning in debt. Main Street doesn't stand a chance. If the AI bubble cracks, the whole credit system could freeze. Like 2008. Like Lehman Brothers. But bigger. You think 2025 looks bad? 2026 is when the real storm hits. Just 4 of the Magnificent 7 companies are projected to spend on AI alone, almost entirely using borrowed money. Trump knows this. That's why he's pressuring the Federal Reserve to slash rates. Cheaper borrowing, more data centers, more GPUs, more capital to keep the bubble alive. Not because America needs more AI, but because the financial system needs more oxygen. And here's the part almost no one talks about. Data centers need water. A lot of water. Many US data centers are built in places like Texas, dry, hot, water-stressed environments. Up to 70% of US data centers are in regions already struggling with water scarcity. It's like building TSMC's chip plant in the middle of a desert. Oh wait, that already happened. This means the cost of cooling, power, and logistics will keep skyrocketing. AI isn't just expensive in terms of money, it's expensive in terms of physics. And this is where the story takes a shocking twist, because the US desperately needs one thing to keep the AI bubble afloat: Chinese money. After years of sanctions and tariffs, Trump is now considering selling China advanced Nvidia H200 chips. Why? Because the US needs cash, because Nvidia needs revenue, because the bubble needs fuel. Suddenly, national security is flexible. Washington says China is collapsing, but still needs Beijing's capital. Even Trump has agreed to visit China. You can't make this up. It's geopolitical comedy. The US can't cut China off, but it can't allow China to advance either. It's a lose-lose loop. Here's the dilemma. If the US refuses to sell advanced GPUs, China will just accelerate its own chip development. Huawei already builds powerful Ascend chips access to cutting-edge US hardware. They've created world-class AI models despite sanctions, despite shortages, despite limits. It's like Tony Stark building an Iron Man suit in a cave. Now imagine what happens if China gets Nvidia H200's chips 8 times more powerful than the limited H20. Chinese AI models could leapfrog global competitors overnight. DeepSeek was built without high-end chips. Imagine DeepSeek 2 with H200s. The US is trapped. Sell chips, lose advantage. Don't sell chips, lose revenue. That's why Trump is quietly preparing to open the floodgates. Let's be clear, this isn't an AI race anymore. It's a credit race, a debt race, a desperation race. More than half of all new US investment spending is now going into AI. If AI revenues don't materialize fast enough, if the global economy slows, if China accelerates, if credit dries up, the entire American financial system could end up over-leveraged, overextended, and exposed. Behind all the smiles, all the handshakes, all the diplomatic flights, it's one thing: leverage. Who needs whom more? And who can keep the illusion going longer? Even Nvidia stock jumps whenever there's a hint of US-China warming. That's how fragile this system is. Just because the US sells chips to China doesn't mean the bubble is saved. It could actually make things worse. Chinese AI becomes stronger. Global competition intensifies. AI prices drop. Revenues shrink. It's the worst-case scenario wrapped in a short-term win. So let me ask you, will the AI bubble hold, or are we watching the early stages of an economic detonation? Drop your thoughts below. I read every comment. And if you found this breakdown eye-opening, make sure you smash the like button, subscribe, and ring the bell so you never miss these deep-dive investigations into the world's hidden power struggles. Stay safe, stay sharp, and I'll see you in the next one.